But until you're confronted with that opportunity where you see your balances going down, where you look at the trade and you're like, oof, I definitely should have got out, right? When you see a big candle like this come and smack you in the face, right? It can be really difficult. So welcome to the OVTLYR Trading Room. This is smart trading made simple. This is where we save time, make money, and start winning with less risk together as a team. And for those of you who don't know me, my name is Christopher Yule. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time, and I've been successfully trading since 2009. But before we start trading, let's get into the lesson of the day. Okay, lesson of the day. Top 5 mistakes beginners make in the stock market. Now, the other day, we covered 2 videos from this channel, financial education, and they were both terrible. One was about when to buy a stock. One was about when to sell a stock. I'm hopeful that he actually has a really good list for us here with the top 5 mistakes beginners, investors make in the stock market.
There are 5 big mistakes that so many beginners in the stock market make. Today, I'm going to share with you guys what those mistakes are and how you can avoid them. I cannot wait to share this with you guys today. Good day, subscribers. Thank you so much for joining me today. I am Jeremy. This is the Financial Education Channel, and today we're talking about the 5 biggest mistakes that I see so many beginners in the stock market make. When you're just first dipping your toe in the stock market and you're starting to invest, I see these mistakes made all the time based upon comments I see in the channel section, based upon what I've seen friends and family do, things like that. So I'm going to share those 5 with you. First, just some housekeeping, just so you guys know. Now I am going to start publishing all videos. I'm generally going to do 7 videos a week, 1 each day. And I'm going to start publishing at least like, and also if you haven't followed out the next day, you'll see it the night before. And it's easy. These 5 biggest mistakes. Mistake number 1 is thinking it's easy. So
I agree. Now, a lot of people do get into the market thinking that this is easy money, right? This is the hardest way to make easy money. Is what I've heard people describe it as. And of course, this is not like digging ditches, right? All you're doing is clicking buttons with your mouse, right? And so on the outside looking in, it's like, yeah, of course this is easy, right? Of course trading, of course investing is easy. The hard part is following the plan that you've made, right? The hard part is actually working with a strategy that you've proven to work. The hard part is just being okay with losses. That is a really hard thing to do. It sounds easy. Oh yeah, I'll be fine with losses. But until you're confronted with that opportunity where you see your balances going down, where you look at the trade and you're like, oof, I definitely should have got out, right? When you see a big candle like this come and smack you in the face, right? It can be really difficult. It can be exceptionally difficult. And this is where people go wrong, because let's say you were long this stock, long the SPY, and you got a big candle like this. And then you decided, you know what? It'll come back. We've had so many times that we've talked about people saying, just hold for the long term, right? On a broad enough time horizon, it'll always come back, right? But there are countless stocks like Peloton, AMC, GameStop, you name it, right? So many stocks, even big names that have hit a peak and just like fallen off a huge cliff. Like Amazon fell off a huge cliff for a long time. And then it did come back. But looking at the stock saying, this is easy money, I'm going to buy it, it has to go up from here, is a huge mistake. So I'm glad he's leading off with that, because yes, it feels easy, but it's absolutely not. It's hard enough that I haven't even started trading yet.
So many people just get caught up in the stock market and see, oh, that stock went up 10% or that stock did good today. Man, it's got to be so easy to make money in the stock market. No, it is not easy. It is certainly not easy to make a lot of money in the stock market. Maybe to get the same gains as the stock market goes up, if you just want to get 8% a year on average, you can just throw money in a market fund account or something like that, or in a general index fund.
Yeah, that actually is true, right? If you're content with market returns, just buy the SPY and ride it, right? And then it is easy, because then you're not doing anything. You're not trading. You're not doing anything other than just like shoveling money into the market. And a lot of people have done that for a really, really long time. And they've actually made a decent amount of money if they leave it in there for 60 years, right? But we're not trying to make 60-year money. We're trying to make 60-year money within, a year, right? We're trying to have those compounding games happen as fast as possible. And when you do, right, you have to have a very different mindset.
and then you can just do as good or bad as the stock market does each year. That's pretty easy, yeah. But if you want to try to get 20% a year, 30%, 40%, those type of high gains, then you really, really need to understand it's hard work. It takes a lot of work. You have to be willing to read through 10Ks, 10Qs, which are long.
You don't have to read through any of that, but you do if the style that I trade. I don't read through any of that. I never will read through any of that because honestly, the fundamentals don't matter. All that matters is the price going up, right? If the price is going up on a stock, that's what matters, right? If the trend is up, that's what matters. Or down if you're ready to go short. But to his point, there is work involved. It's a lot of mental work. I'm not digging ditches out here. I'm not breaking a sweat. There's a lot of mental work that goes along with it.
Long reports. You need to find out recent news on these companies. You need to look at all the financials and dig deep. You need to find out about the CEO and CFO. How reliable are they? What's their track record with?
Again, I don't feel that you need to do all that. I don't think you need to research any of that, but you do need to be market aware. You do need to find a stock that you like, get the signals that you like, and then enact those signals when they come. I personally feel like all that time and effort people put into studying fundamentals is, as we've talked about before, an excuse to justify when a trade goes wrong. Right? I like the CEO. I like the stock. I like the fundamentals. But if the market doesn't, then it doesn't matter, right? If the price is going down, the price is going down. And you can decide to be on it when it goes down or stand on the sidelines and watch it go down without you.
With the company, you need to find out all this information. And I would say the hardest part of that, it would be okay if you just found that out on one company. But the fact is, you're going to need to sift through 50, 100 companies plus before you finally find a really good one that you want to invest in.
Which, in the style of trading that I like to showcase, right? It is looking through like 50 or 100 companies. In fact, for example, let's say I was ready to go short. OVTLYR has 82 names on the bear list today. 82 names that got a sell signal today. Now, I don't want to go through all 82, right? And so that's where scanners, that's where screeners, that's where charts, right? All that stuff that helps you parse through data faster, that's where that comes into help. Because yeah, there could be 80 to 100 stocks a day that come through with opportunities. But that doesn't mean you have to take every single one, right? The way that I like to trade, I like to filter out. Hang on. I like to filter out, right? Start with there we go. Start with all of them. And then basically it's a funnel. Only the best ones are going to fall out of the bottom of the funnel. And those are the ones that I want to trade. And he's saying the same thing too, except in his world, he's saying you need to go and do your analysis on like the fundamentals and the earnings and the CEO and blah, blah, blah. Who cares? Price is all that pays. Everything else is just a justification to support your thesis.
Now, some might get kicked out right off the bat because you just see it and it's like, oh man, that's nothing I want to touch. So that one you don't even look far into, but you're going to still look super deep into a ton of companies and then find out you don't even want to invest in that one. So it's a lot of work, guys. I cannot tell you how many hours I've spent over the course of my investing career reading through 10K after 10K after 10Q and looking at all the news for this company. And I decided, you know what, I'm not going to invest in that one. Oh, do the same thing the next night. I'm not going to invest in that one. Same thing the next night. And then finally I come across a company I really like a lot.
By the way, 10Ks, 10Qs, all that stuff, those are like quarterly reports, right? You actually think that the information you need finally on September 30th is going to come out and be like, oh, where has this been all my life? I need to buy this, right? It's not going to work like that, right? It's either going to be in an uptrend or downtrend when you decide to get to that point, or potentially even a sideways trend. And then you build those justifications with all that extra data.
And I actually stick my money into. So understand, it's a lot of work if you want to get these great gains. Number 2, listening too much to others. So
I agree with this. I actually block out anybody else's trade ideas, right? It is very refreshing to not have to think, oh, you know what? Maybe Jeremy's got a point here, right? Maybe AMD stock really is a buy today. When you don't, or when you have a plan, when you have a solid trading plan that you have traded, that you've tested, that you've worked with for a while, right? Everything else is just noise, right? It may work great for someone else, but once you have your plan, it's just noise, right? It's just people talking about stocks, and then you can avoid it, right? Like, I mentioned AMD the other day, or because we watched a video the other day about AMD stock, which is continuing to fall down another 2% today. Like, if somebody's telling me to buy AMD stock right now, It doesn't fit my trading plan, so I'm never going to do it. But a lot of people are very interested, right? A lot of people want that stock talk, right? They want to get it. The old adage is, you know, whenever you get into the taxi and the taxi driver decides to give you stock advice, that's the top of the market. I think we actually just reached that not all that long ago. But the people love to talk about stocks when they're winning, right? And some people may have just gotten super lucky. But do they actually have a trading plan? Do they have a plan to get in, a plan to get out? Reasoning and justification behind that, whether it's fundamental or it's technical or it's, you know, some other piece of data point. That's what matters.
In the stock market, it's really important that when you research something and you really believe in a company, you listen to yourself first and foremost on that investment, and if that investment's a good idea. If you listen to too much from the media, like CNBC and Bloomberg and other places, you might end up making a bad choice. Even if you listen to me, like say I break down these stocks every week, and I might start doing it twice a week. For instance, I broke down Netflix a couple weeks ago, right? I said it wasn't a buy. I said it was not a stock for me. It's not something I would invest in. Netflix still went up 20% the next week. It went. So the bottom line is, if you were, say, investing in Netflix and then you saw my video and you said, oh, Jeremy, he wouldn't invest in that, so I should invest in Netflix, and you sold it, that was a really bad decision on your part. So you cannot listen to.
I'm actually really curious now. So this was published October 28, 2016. That's crazy how long ago that was. Let's go to the Netflix stock in October 2016. And let's go to the weekly candles just to save a minute of time. October 2016. Here. Yeah, that big candle right there is what he's talking about. That was a giant candle, right? And yeah, it was trending up, right? And just because you didn't take a trade doesn't mean you're a bad investor. Doesn't mean you're a bad trader, right? It just didn't fit your plan at the time, right? Don't wrap your self-worth around if you did or didn't catch a certain move, right? There's always going to be new opportunities.
Too much to others. I cannot tell you guys how many times in my investing career that the media and everybody was saying, you know, that stock's horrible, you shouldn't invest in that, blah, blah, blah. And I believed in myself, and I believed that was the right investment decision. And then guess what? I had a great gain on that stock, all because I listened to myself and I didn't listen to them. And also, a lot of times on these channels, they'll suggest a stock, you know, on cable and whatnot, they'll suggest a stock, and that stock ends up going down massively over time. So, and this includes also analysts. Sometimes analysts are so far wrong with the stock, they'll have a buy rating, and that stock will just be going down and down and down. And then they wait to bring their sell rating until that stock's already bottomed out. And at that point, it's already going back higher. So, first and foremost, trust yourself. Trust yourself over everybody else. If you,
I agree with that. I actually agree with that a lot. But of course, you need to have a plan in place, right? And when you have your plan in place, you need to go through it each day, right? Like we do in the trading room, right? It's all about knowing what to do when certain things happen, right? And it may be completely different than the way that I trade, and that's okay. But you need to figure out what that plan is for you and then just roll with that.
if you want to listen to other people, that's fine, but don't listen to them so much that they're the ones influencing your decision whether you buy or sell a stock. Number 3, I see this all the time with so many viewers on this channel. You guys get like infatuated with short-term fluctuations in price. If say a stock I cover goes down a lot one day or up a lot one day, you guys are like, oh, what's going on with that stock? Is it going to go back up? This and that. And you cannot get, if you're a short-term trader and you're a day trader, then absolutely that's stuff you got to pay attention to. For my style of investing, which is long-term investing, a short-term fluctuation is nothing. Big deal. If I invest in a stock and it goes up 10%, great. Okay, who cares? If it goes,
you know, to his point, the fluctuations are how am I trying to say this? A small fluctuation for me may be a big fluctuation for you. And a big fluctuation for you may be a tiny fluctuation for him, right? Those movements are really dependent on your trading style, okay? And so where I'm going with that is if you set your risk correctly, right? I'm always getting into a trade with half an ATR as my stop loss point. That lets the stock breathe, right? I'm not going to let it breathe all that much because if I'm wrong, then I'm only going to lose a certain amount. And it could turn around and go back up. Absolutely could. But I'm going to let it, you know, I'm going to let it work. And you've got to let a stock work, right? It's not like you buy a stock and it immediately always goes up. That does happen. But how many times you bought a stock and it immediately goes down, right? What matters is your risk control. So I would caveat what he's saying here with not to say don't worry about short-term fluctuations, but keep your risk in check. That's how I would have phrased this, right? Keep your risk in check. If you know where your risk level is, don't let it go past that point.
Goes down 10% in the short term. Who cares? It doesn't matter in the short term. All that matters is in the long term. That stock had a great gain for me. If a year, 2 years, 3 years down the line, that stock's down or even just barely up, then we have an issue. But if something happens in the short term, if it goes up 10%, I'm not like, yay, I'm the best ever. I'm the greatest investor in the history. No. And the same thing if it goes down 10% a couple weeks after investing, I'm not like, oh my gosh, I made such bad decision. I should quit investing. Short-term fluctuations happen. Don't pay them any mind, other than maybe if it goes down a lot and you still believe in that company, maybe you want to buy some more. That's something I do. When a stock goes down.
Please don't do that. Please never, ever, ever do that. That's horrible advice. I pulled this up the other day, but it's losers average. So Paul Tudor Jones is one of the market wizards, one of the greatest traders of all time. And he had this, that's not the best picture. Let me see if I can find a better picture right there. So that's Paul Tudor Jones right there, PTJ, Paul Tudor Jones. And even he had to post on his wall, losers average losers. What does that mean? That means if a stock is going down, right? Let's see if we can find a down point on this chart. Let's go to this stock. Yeah, here we go. Right. Losers average losers, right? If you bought it up here, and you bought more here, and you bought more here, and then you bought more here, and then you bought more here, sure, your average price came down significantly, right? Your average price that you got filled is way, way, way down from where it started. But also your booking losses, right? Let's say if this is $10 and then it turned into $5 and then it turned into 2.5 and then it turned into 1. The market's telling you something and you're not listening, right? You're not listening if you're doubling up, tripling up, adding to losing positions. But on the other end of it, right, you actually can stack winners. Now, I used to do that. I don't do it anymore, but you can absolutely add to positions that are winning because they're in a trend that's working. So this one I don't like. This particular mistake he's talking about here, please don't average into losers. It's a really, really bad idea. It just means you're already losing and you're making it worse for yourself.
After I invest in it. Number 4, getting emotionally attached to a stock. A lot of beginners in the stock market.
That's so true. That's so true. And it's so difficult to take a loss on a stock because as a trader, right? And I felt this way too, that you get into a trade and it doesn't work out, and then it's like, oh, I feel like such a loser because it's not winning. Oh man, I don't want to take a loss on the trade. Then I have to, like, if I close the trade, then I'm guaranteeing a loss, right? Because maybe it'll turn around one day, right? People get emotionally stuck in a stock and then completely get wiped out because they didn't control their risk. On the other side of it, right? People get emotionally attached to a stock and they watch it go all the way up and all the way back down. And that's probably much worse, in my opinion, because you're looking at those paper gains stacking. And then you see it get up to the top and you're like, I'm such a genius, right? And then the next day it's down, and the next day it's down. And you're like, don't worry, it's going to come back up. And the next day it's down. This is what happened to all the GameStop people. This is what happened to all the AMC people. They're stuck emotionally to a stock. It's never going to recover that. It's never, ever going to recover that. That was a moment in time that was amazing. It was so amazing to have traded it. But that moment's over. Right, the likelihood of seeing, hundreds and hundreds of percents ever happen again is next to zero. So yeah, I would say watching it go up and then watch it go back down, I think that hurts a lot worse than watching a stock you buy just go down, right? Because then you don't have the regret, because not only do you have to book the loss, but you also have the regret of, oh, I could have had so much more money if I'd sold it sooner.
Market also, and even some more advanced investors, they get too emotionally tied to a stock. They fall in love with that stock so much that if someone says something bad about it, they get so offended and they want to cuss that other person out, and that other person's a devil and this and that. Understand, a stock is a money sign. A stock is a money sign, nothing more and nothing less, guys. It's a way for you to make money. So don't get emotionally tied to that stock, because at some point you're going to need to probably sell that stock, unless it's such a great company that 50 years from now it's worth 50 times what you invested in it or whatever. Most of the times you're going to want to get out of that stock and then go into something else. So there's no point in getting emotionally attached to a stock. Don't fall in love with the stock.
And you don't have to. If you have exit rules for your trades, right? And I go through this every single day whenever I'm looking at one of my trades I have on. Does it meet one of my criteria to exit? If it does, then I don't have regrets because I already established when I would get out of the trade before I got into the trade. That is a tip right there that'll separate the best from the rest. Knowing when to get out of the trade because you've already made your strategy before you get into the trade.
Number 5, thinking about macroeconomics. This is something that I see all the time as well, thinking about macroeconomics or political risk. So for instance, in 2011, 2012, 2013, there was so much talk from the media when I would watch these news channels and whatnot, that they would have guests come on, they're talking about double dip recession. And oh my gosh, we're going to go into a double dip recession and oh, the economy is going to fall and we're going to go, things are bad and this and that. Well, if you listen to that and you stayed out of the markets and they were saying, stay out of the market, be defensive, be in gold or whatever, you would have gotten killed. You would have lost so many games because guess what? 2011, 2012, 2013, those were phenomenal years for the stock market. Go back and look at the chart and look at how much the markets went up. Never mind how much so many individual stocks went up. So paying attention to all that crap is you need to just block it out, in my opinion, unless you have unless you're a genius and you're psychic and you know absolutely this next year the economy is going to go into recession for sure, unless you're like 100% sure in that, which I don't know anybody who's ever been right about that. No one ever. So because generally when something happens in macroeconomics, it just comes out of nowhere. Another one is the political risk. Someone says, man, if that person becomes president, then the stock market's going to tank. And if that person does it, we're going to be in depression and all this stuff. Guess what, guys? The United States of America, any idiot can run it. That's the truth. Any idiot can run it and we'll still be just fine.
I don't know about that. Joe Biden failed pretty miserably, just saying. But I do agree with his point that macro factors probably shouldn't play into your plan, right? You as a retail investor, you don't have to move trillions of dollars like a hedge fund or Fidelity or retirement accounts, right? You don't have to move that kind of money. And because you don't have that kind of sway in the market, macro factors like that probably shouldn't be even on your radar. I know they're not on mine. I literally don't pay attention to the news. I know that sounds crazy. It's like, how can you be a trader and not pay attention to the news? How can you be a trader not glued to CNBC all day, every day? It's like, I don't need to. What do I need to do that for? Right? Nothing they say on there will change my mind on getting into a trade or getting out of a trade. I will not get into a trade because they said, hey, it's a great buy. I will not get out of a trade because they say, hey, bad news is on the horizon, right? I will make my trading decisions based solely on my trading plan. And you should do the same too, right? Because when you base your decisions on your own trading plan, you are infallible, right? Of course, we all make mistakes. Not every trade is a winner, but you've insulated yourself. That's a better word. You are insulated because nothing that someone else can say should change your mind, because you've already got your plan in place. Now, I keep harping on that today because if we were to say, is there a number one biggest mistake ever in trading or investing? I would say it's not having a plan. I would say it's getting into a trade with no idea, right? Getting into a trade because somebody said, hey, this was a great idea. Somebody said, hey, MicroStrategy is going to go up. Hey, did you buy PepsiCo the other day? Oh man, if you own Coca-Cola, you need to get out of it right now, right? All of that should be in one ear and out the other, because you've got to follow your own trading plan. And when you do, and you execute, you're insulated from the market. You're insulated from anything like that happening. And as we've shown this week on the SPY, having that plan in place, right? We've been in cash for weeks at this point, and we finally got the sell-off that I said was coming. And it was choreographed. What do I mean by it was choreographed? If we go to the market breadth here, well, first, we got a sell signal on the SPY on November 21st, right? So if I mark that on the chart, November 21st, here, this candle, okay? It's literally higher than the price is today, okay? So first, it was choreographed because we had the sell signal in OVTLYR. Second, market breadth was so obvious. More and more stocks were hitting the sell list. Like I mentioned earlier, 82 names on the sell list today versus only 6 names on the buy list. And then we go into the market breadth, and you can see how the market breadth, the green line right there, is the number of stocks with buy signals, right? From 0 to 100%. And the red line is the 10 EMA of that. And you can see it's falling hard and fast. It's at 34% right now. So this move down was choreographed for a while. And if we go to the S&P 500 map, one of the things I love to look at, and we're going to look at month to date, 1 month performance. Yeah. And I've been mentioning it several times. There were only a handful of stocks green in the whole market, right? The Magnificent Seven stocks, plus, except for NVIDIA, but you add Walmart into there. Like, those were the only stocks really that were green at all. In fact, if I go to the 1 week performance, yeah, look at that. Like this move should not have been a surprise to anybody, but a lot of people are caught flat-footed. A lot of people are caught with their pants down because they thought new all-time highs, everything's great, but under the surface, the market was just like eroding away.
Fine. Now, we might be better off with some than others, but the bottom line is anybody can run the United States. You look at, so many presidents that are hated now that ran the country, and guess what? We still did all right. We still did all right. The United States kept going forward, and that's true for most of the developed.
I got to say, the last 4 years were probably really, really bad for a lot of people. I mean, we can look at the macro factor on Joe Biden running things and see just how bad things had gotten for a lot of people. Go ahead and tell me in the chat that I'm wrong, because I don't think anybody out there watching this is going to say, oh yeah, things are way better than they were 4 years ago. I don't know a single person who would say that.
Economy. Sometimes you just get someone bad running it, but
listen, I can talk politics all day. Politics and trading, I love.
Everything still works out in the end. It's not like, oh, it's doomsday or something like that. So try not to pay too much close attention to the macroeconomics. Try not to pay too much close attention to the political risk and all those kinds of things, guys. Thank you for watching so much today, guys. If you have not subscribed, you may want to.
All right, so I'm going to rate that video. I'll never rate a video 7. I feel like 7's the cop-out answer. Would I rate it 8 or a 6? I would not rate it 8. I would rate it a 6. I mean, there was some good stuff in there. There was also some not so great stuff in there. I wouldn't say it was a 5. So I'll give that a 6 out of 10. Did we learn anything on that? Yeah, I mean, as I talked about many times, it's having that plan, right? If you don't have the plan, you shouldn't be trading. At the end of the day, you really shouldn't, right? A trading plan should be rules-based, top to bottom, right? Now, it may be totally different than my plan. My plan always starts with the market and works its way down through the sectors and then to the individual stocks. But yours may be the opposite. You may be one of the people who love to look at every single chart in the world, and there are traders who do that. I can't imagine that kind of stress to go through every single chart out there, but there's people who do, right? And then they say, okay, how does the sector look for that? How does the market look, right? In my opinion, flip that on its head, it's a lot easier. So that's going to wrap it for today's trading room. Now, listen, tomorrow will be at regular time, and we will be, that'll be the last live stream of the year. So I hope you can make it. Thank you so much for coming to the OVTLYR Trading Room today. Be sure to share this and hit the like button, because I know you're already subscribed. And I will see you right back here for the final live stream of 2024. Have a fantastic day, and we'll talk soon.